Here's the setup almost every crypto analyst is completely ignoring right now. And if you miss this window, you're going to be watching other people post their gains in 18 months, wondering exactly what went wrong. Drop a comment right now. Do you think Bitcoin bottoms before or after October? I'm reading every single one. I want to talk about something specific today, not just where Bitcoin is going. Anybody can throw a number at you. I want to walk you through the exact sequence of events that I believe is going to unfold between now and the end of 2027. I'm calling it the three-gate framework. 3 specific windows, 3 decisions, and the people who understand all 3 are going to have an enormous advantage over everyone else who's just reacting to price. We're going to cover the current market reality without sugarcoating it, the timeline I'm tracking for Bitcoin's bottom and recovery, the specific catalysts that are going to trigger each gate, and the exact type of plays I'm positioning for right now, including one narrative that I think is going to blindside a lot of people who are sleeping on it. Let's get into it. First, let's be honest about where we are, because a lot of content creators are still dancing around it. We are in a bear market. Say it out loud, bear market. And I know that phrase makes people uncomfortable, but here's the reframe that matters. Every single dollar of generational wealth built in crypto was accumulated during a bear market. Not at the top, not during the euphoria, in the quiet, in the red, when everyone else logged off. Since Bitcoin touched its all-time high, the market structure broke down. We lost key support levels that had been holding since 2023. Altcoins didn't perform the way the historical playbook suggested, and that deviation is important. It tells us something changed in how this cycle is playing out. The macro environment right now is genuinely complicated. The Federal Reserve is in a holding pattern. Markets are pricing in maybe 1 or 2 rate cuts this year, but there's real uncertainty around inflation data and what the Fed chair transition means for monetary policy going forward. That uncertainty alone has been suppressing risk appetite across equities and crypto. Here's the thing, though. This setup isn't new, and the pattern it's following is actually one of the clearest signals I've seen in years. So let me ask you something. What if the confusion you're feeling right now is actually the signal? Gate 1 is what I call the compression gate, and we're in it right now. This is the phase where Bitcoin trades in a tight, frustrating range. It doesn't crash hard enough to make the bottom obvious. It doesn't rally hard enough to make bulls feel vindicated. It just grinds, sideways, with occasional bleeds lower. This is the phase that shakes out the most people, not because they lose money, but because they lose patience. Historically, looking at 2018, 2019, and 2022 into early 2023, this compression phase lasts 4 to 7 months from the point where the downtrend is confirmed. We confirmed our downtrend in Q1 of this year. That puts Gate 1 closing somewhere between late summer and October. Gate 2 is the catalyst gate. This is the window, usually 2 to 3 months long, where specific external events stack on top of each other and flip market psychology. In 2020, it was the Federal Reserve's liquidity injection and pandemic stimulus. In 2023, it was the ETF approval narrative building momentum. What are the catalysts I'm watching for Gate 2 this cycle? Number 1, Federal Reserve rate decisions. The FOMC has multiple meetings between now and year-end. We don't need all of them to deliver cuts. We need one confirmed cut with dovish language, and sentiment shifts fast. Number 2, the midterm election cycle. Historically, the 12-month period following midterms has delivered roughly double the market returns of average years. Presidents front-load economic pain early in their tenure. If that pattern holds, the juice is coming in years 3 and 4. Number 3, a Bitcoin supply shock narrative. We're now past the halving. The delayed effect on available supply typically takes 6 to 9 months to show up in price. That clock is ticking. Gate 3 is where it gets really interesting, and most people aren't going to be positioned for it because they'll be too early or too late. I'll get to that in a second. Let me give you the numbers without the hype. Every major Bitcoin bear market has produced a drawdown of between 78% and 86% from the peak. If we apply even a conservative 70% drawdown from the all-time high, we're looking at a target range in the low $30,000 to high $30,000. Apply 60%, and you land somewhere in the $50,000 zone.
At current prices, we're hovering right at the edge of that second scenario. My personal accumulation zone starts under $60,000, and I get more aggressive the closer we get to $40,000. I'm not trying to catch the exact bottom. That's a fool's game. I'm trying to accumulate enough at a discount that when the next leg up happens, the math works heavily in my favor. And here's my actual price target for the next peak. I think Bitcoin hits somewhere between $160,000 and $220,000 going into 2027, 2028. Not because I'm being optimistic, but because the 4-year cycle data, combined with institutional adoption, ETF inflows, and the macro backdrop, all point in that direction. If this framework makes sense to you, smash that like button. It tells me to make more videos like this instead of guessing what you want. Now, Gate 3. This is the acceleration gate, and it's why being positioned before October matters more than people realize. When sentiment flips in crypto, it doesn't flip slowly. It flips overnight. One piece of macro news, one rate cut, one major institutional announcement, and suddenly the people who were being patient are panic buying at 40% higher prices than where we are today. Here are the narratives I'm watching most closely for this next cycle. AI-native crypto infrastructure is the first one. We're moving into an era where AI agents need to transact on-chain autonomously. The X402 payment protocol, Coinbase's Agent Kit, the entire infrastructure being built for machine-to-machine financial transactions. This is not speculation, it's already being deployed. The tokens that sit at the intersection of AI and DeFi infrastructure are going to see enormous inflows when retail catches on. Projects with real revenue and buyback mechanisms are next. In the last cycle, the market rewarded hype. In this next cycle, I believe the market is going to start rewarding fundamentals, projects that generate actual revenue, that buy back their own tokens, that have audited financials. This is a major behavioral shift, and the plays that benefit from it are hiding in plain sight right now. Layer 2 ecosystems with genuine user adoption round out the top narratives. Not every L2 is going to survive, but the ones that have daily active users, TVL that's held through the bear market, and developer activity, those are the ones where early positioning pays off massively. And yes, meme coins will run again, they always do, but the smarter play is to front-run the ecosystem before meme coin season starts, because by the time memes go parabolic, the underlying infrastructure tokens have already 5x'd. Here's the question I want you sitting with right now. Are you positioned for Gate 3, or are you going to be watching from the sidelines? Here's what my approach looks like in plain terms. I'm not all in on crypto right now. I'm diversified, some exposure to AI and tech equities, some in pre-IPO positions in sectors I have conviction in, and a growing allocation in crypto that I'm building slowly and deliberately. In crypto specifically, I'm dollar cost averaging into Bitcoin in tranches. Each
Tranche gets larger the lower the price goes. I'm also allocating a smaller, higher risk portion into 2 or 3 specific altcoin positions that I believe have the fundamentals to survive and the narrative tailwinds to outperform in the next bull cycle. What I'm not doing, chasing pumps, trading futures without a system, or letting anyone else's urgency dictate my timeline. The single most important thing you can do right now, regardless of portfolio size, is build your framework. Know your buy zones, know your exit targets, know your position sizes. Don't wait for the bull run to figure that out, because when it hits, emotions take over and you'll make decisions based on fear and greed instead of a plan. Here's where I'll leave you. The window we're in right now is uncomfortable on purpose. Bear markets feel like punishment. They're actually the enrollment period for the next wealth cycle. The people who show up during this period, who do the research, build the positions, and stay disciplined, are the ones who are going to have stories to tell in 2027. I've been wrong before. I'll be wrong again, but the 3-gate framework gives me a structure to make decisions based on data, not emotion. And that's all any of us can do. Drop your Bitcoin bottom prediction in the comments. I want to see where everyone's head is at.
If you want me to do a deep dive on any of the specific narratives I mentioned today, AI native crypto, layer 2s, revenue protocols, comment which one and I'll prioritize based on what you all want most. If this video added value, subscribe and hit the bell. I'm going to be posting more frequently as we approach Gate 2, and I don't want you missing the timing breakdowns when they matter most. See you in the next one.